Everyone laughed when Toyota refused to go all electric. But looking at the sales numbers for 2026, who is laughing now? Before the comments start pouring in, let me clarify. EVs are not dead. What's fading is the idea that EVs would take over smoothly, everywhere, all at once, and that any company not going full EV is behind. Toyota faced criticism for years for not betting the entire company on one card. They were branded old-fashioned, slow, and scared. However, right now, the market is doing something Toyota predicted. It's splitting into reality. Some regions are accelerating their adoption of EVs, while others are stalling. Buyers are price-sensitive, and charging infrastructure remains a crucial factor. Companies with flexible lineups are looking particularly calm in this environment. Let's break down the Toyota was right narrative like a real business case study. Here's the headline that matters. Global EV sales started 2026 with a slowdown. According to data from Reuters, global EV registrations in January 2026 fell by about 3% year over year to almost 1.2 million, with significant declines in key regions. China down 20% and North America down 33%. Now, some may argue that January is a seasonal month. That's true, but here's why this is important. You can sense a shift in the mood. Even the details are telling. Europe performed better, with reports noting that while Europe's sales increased year over year, China's and North America's numbers dragged the global total down. In essence, EV growth didn't die. It became uneven, and uneven markets penalize companies that rely on a single narrative. The twist is that while 2025 was still a strong year for EV sales, the cracks in the market began to show. This isn't an EV collapse story. It's a story about a transition stress test. Benchmark Mineral Intelligence reported 20.7 million EVs sold globally in 2025, an increase of 20%, but the regional split was a warning sign. North America saw a 4% decline while Europe continued to grow, and China grew at a different pace. So yes, the world did buy a lot of EVs. However, the market also revealed something the hype train didn't prepare us for. Adoption is not a straight line. It's influenced by a complex interplay of price, infrastructure, incentives, and consumer trust. This is where Toyota's slow and steady strategy begins to look less like fear and more like effective risk management. Why did Toyota get mocked in the first place? Toyota didn't claim that EVs are useless. Instead, they asserted that a one-size-fits-all EV future is unrealistic. In a world that prefers simple narratives, that perspective sounded like heresy. The hype story was straightforward. EVs rise, gas declines, everyone wins, end of story. Toyota's story has often seemed complicated. Hybrids now, plug-in hybrids where they make sense, EVs where appropriate, and hydrogen in specific applications. Meanwhile, the company continues to improve battery technology. This isn't a slogan, it's a strategy. Who's laughing now? Let's take a look at the numbers. According to Reuters, Toyota maintained its position as the global sales leader in 2025, achieving record sales of 11.3 million vehicles. Importantly, hybrids accounted for 42% of Toyota's global sales, while battery electric vehicles made up only 1.9%. Read that again. In the largest real-world customer survey we have, people spending their money, Toyota's winning formula is not all EVs. It's a significant hybrid wave. This is the vindication angle. While others debated online, Toyota focused on selling cars in the real world. Here's why hybrids are thriving right now in straightforward terms. A hybrid vehicle offers better fuel efficiency, eliminates charging anxiety, provides a familiar driving experience, makes resale easier, and is often priced lower than a full EV. It's the choice for those who want progress without the hassle. When economic conditions tighten, buyers tend to opt for the safest option. This isn't anti-EV, it reflects consumer behavior. Even in Australia, where the market has unique characteristics, Toyota's hybrid dominance is clear. One report indicated that nearly half of the Toyotas sold in 2025 were hybrids. So when people claim that Toyota is falling behind, the numbers tell a different story. Behind what? A headline or behind cash flow and volume? The narrative about the death of EVs is more accurately the death of EV hype. Let's be honest, a significant part of the EV boom was fueled by two factors: incentives, and consumer belief. When incentives decline, interest can wane as well. When consumer confidence is challenged by real-world issues, demand becomes more selective. And those real-world issues persist. Charging access is inconsistent. Charging reliability varies. Resale values can be uncertain in some markets. Insurance and repair costs may be higher. And some buyers simply prefer not to change their routines. Thus, what is fading is not the EV itself, but the notion that EVs sell themselves. This explains why many brands are slowing down or reevaluating their EV plans, causing the conversation in 2026 to feel less like a celebration and more like a financial review. Toyota's true advantage is that it didn't stake its future on favorable conditions. The business lesson here is that Toyota planned for a complex world. Many hype-driven strategies assume cheap electricity, strong incentives, rapid infrastructure development, satisfied consumers, stable interest rates, and smooth supply chains. In contrast, Toyota recognized that different countries progress at different rates, consumers have varying budgets, and policies can change swiftly. As a result, Toyota built flexibility into its model lineup. If EV demand surges in one region, Toyota can introduce more EV models there. If hybrids are more popular elsewhere, Toyota can ramp up hybrid production. And if incentives are reduced, Toyota can still sell cars. This approach isn't old thinking, it's a sound portfolio strategy. But let's clarify, Toyota isn't anti-EV either. This is where many people misunderstand the situation. Toyota didn't reject EVs indefinitely, it simply avoided committing to them too early. Recent reports indicate that Toyota is planning to expand its electric vehicle (EV) lineup in the US. While EVs are certainly part of the future, they are not the only option available. Hybrids, which are often overlooked amid the excitement surrounding EVs, provide a practical middle ground that can effectively reduce fuel consumption without requiring a dramatic shift. Unlike the polarized view that paints gasoline vehicles as entirely negative and EVs as wholly positive, hybrids appeal to a wider audience and are driving sales. In 2025, Toyota not only survived, but thrived by focusing on hybrids. Although global EV sales are expected to surpass 20 million, growth will vary significantly across different markets. The brands that will succeed are those that can sell vehicles profitably during this transitional period, rather than merely chasing trends. Toyota's cautious strategy has proven effective. Data from early 2026 shows a decline in global EV sales, particularly in China and North America, while the company has experienced robust hybrid sales. This serves as an important reminder: the future is unpredictable, and adaptability is crucial in a changing market. If this changed how you see the EV race, hit like so YouTube shows it to more people. Subscribe for more business case stories that cut through hype.